Hey guys, happy Saturday. I'm out here at Home Depot right now. I just wanted to record a quick video for you guys and touch on a topic that I've been seeing a lot lately, which is it has to do with like passive activity losses in real estate. So, when you have a rental property and you rent it out long term, and let's just say you have a lot of losses for the year. So let's say you're taking a lot of depreciation and you have like say $10,000 of excess depreciation in the property, and you have a big loss for the year at the end. You usually can't take that loss. So a lot of that just carries over year to year. So you'll just have like zero net income for the year if you have a passive activity. So two strategies that you can typically use are what's called the active participation and the material participation tests, which are a little bit more difficult to actually pass through the IRS. So the active participation is basically like a $25,000 deduction. So they have like a set of tests that you have to pass, and if you end up passing them, you can take up to $25,000 of the losses that you couldn't take before as like a passive activity. And then the same thing with like material participation, which is a lot more difficult. Like it's even harder to pass that, like more difficult than it would be to pass like the active participation test. So it basically is like you have like a passive activity, and then you have like active participation, which is a little bit more like simpler, but it's still more difficult. And then you have material participation, which is like the hardest one to pass, which is like you have to be a real estate professional, pretty much. And if you pass that one, then there's really no cap on how much loss you can take. I'll drop some of the tests down below so you can take a look if you have any of these scenarios that might apply to you, and I'll also get into like some cost segregation studies and some more high level like 1031s in the future. But I just want to let you guys know that those are available if you're currently stuck with just taking no losses for the year at the moment. You're just strictly passive. There's additional strategies, like you can switch to short-term rentals and things like that to free up extra losses, but you have to become a little bit more active in your rental. So you have to get a little bit more strategic in your current plan. All right, I'll talk to you guys later.